The markets are pretty flat this morning, as is Tesla, but there's lots of good news as usual. Let's get into it. So lithium prices are almost back to pre-pandemic lows. They continue to fall like crazy. Those price cuts would indicate what Jeff Lutz has been talking about and others, that these temporary price cuts on the Model Y by $1,000 is almost certainly offset by an ongoing 2% drop in the cost of goods. This is not just because of lithium prices, battery prices in general, but also prices across the board of commodities, as well as improvements in methods and technologies at Tesla. All of those things are averaging about 2% per quarter in terms of the cost of goods going down. And so absorbing a $1,000 temporary price cut on the Model Y should not be a problem. We have this from Tesla fan MTL this morning. Almost the last domino to fall. Walter Bloomberg is reporting this morning that Stellantis to adopt Tesla EV charger connector in the United States from 2025. So that is the last major company to come. There's a few small companies that haven't made the decision, but it's good news to hear that. Then, according to Warren Redlick this morning, he says Cybertrucks are on the Japanese website available for sale. So apparently they're okay in Japan, and apparently Tesla's going to export. Who knew? This is brand new news. If you didn't watch the Super Bowl, or if you didn't watch every single ad like I did, who knows why I do that, but I just can't even get a bio break as I try to make sure that I see every single play and every single ad. There was only 2 electric cars, I think. I didn't count, but I will say that Kia's was an excellent ad using pathos to grab your heart. On the other hand, there wasn't any sell at all. I think in that particular ad, I'm not sure why I want a Kia rather than some other electric car, or even some other car in general. From Troy Testlake this morning, he says, here's a table that shows the estimated timeline for the Model Y design refresh, also known as the Model Y Juniper upgrade. Tesla also said it's not happening in North America this year, and that's what this timeline showed. This timeline is actually showing July for Shanghai and January for the US and Berlin. So there you go. Maybe that's the final word on this. I'm not sure, but Troy Testlake tends to have this kind of inside information from time to time that turns out to be true. This is Randy Kirk, by the way. If you haven't liked yet, please hit the like button. Please don't forget to do that. And then subscribe. And also hit notify. And then I want to thank all the Patreon folks that are joining up. Thank you so much for helping to support the show and be, producers of the show. $3, $5, or $10. And I think you know what the great opportunities are to get free books and also free Cybertruck bottle openers if you do that. All right. We've got Walter Isaacson on CNBC this morning. You remember Walter Isaacson? He's the really significant, serious biographer, and he did the Musk biography recently. He was talking about, basically, they asked him, what's going on with all these investigations, the SEC, blah, blah, all these people that are always bothering Tesla, bothering Elon Musk, and now the Delaware situation. He says, look, I don't necessarily think that the president of the United States has put out an edict and said, hey, go after Elon. But we also know that effect where people downstream from the leaders kind of know what the leader wants. He didn't say it exactly that way, but that in general, Elon Musk has gone off, he used to be a member of the liberal tribe. Now he's a member of the middle right tribe. And you always go after the guy who left your group, okay? I'm sure you've seen that in your life when somebody's no longer wants to play in your gang and they go over to the other gang, then all of a sudden you're going to do what you can if there's opportunities. Not you necessarily, of course, but in general, people then don't invite him to the parties anymore and make sure that he's not on the list. You know what I'm talking about. Okay. So, but he says also, he thinks that his politics have had an effect. Then he goes on to say about the Delaware case. He says it's the craziest thing. He doesn't understand it at all. Completely baffling, and reminded the CNBC folks that were hosting him that they had said it was impossible, that Elon, there was no way in the world he was going to be able to make those tranches. Dan O'Dowd wasted a few more millions of his dollars on a regional Super Bowl ad, attempting to get folks to boycott the Tesla FSD. I'm suspecting that they will be just about as useful and beneficial as they were last year. And also have to wonder why he only goes after Tesla's driver assist rather than some of the other companies who also have driver assist packages that don't have any nags or anything. Anyway, let me know in your comments below. Do you think the Dan O'Dowd effort is having any appreciable effect on Tesla or anybody? Anyway, yes. So Barron says this morning, the earnings season is helping. Around 75% of companies have beaten earnings expectations so far, according to FactSet data. That's above the 10-year average of 74%. They do not say that most people look at an 80% level or somewhere close to 80%, 78 to 80% level as being bullish. 75% average is not exactly great. The market is also rewarding those beats more than it typically does, with stocks rising 1.4% over the 2 days before and 2 days after earnings, compared with the 5-year average of only 1%. With more than 60 companies reporting this coming week, earnings could once again provide stocks with some protection from other risks. I wonder what risks he might be referring to this particular week. Oh yeah, the CPI, the PPI, etc. Yeah, in general, I'm saying that the earnings report has helped the market. It's the thing that has allowed the S&P to get to all-time highs and to continue to go higher. We'll see how this plays out over time. My general impression right now is, well, I saw a report the other day. It was kind of interesting that when the stock market has done this well through the middle of February, 25 out of 28 times the end of the year, the S&P has been up for the year and also has gone up from this point. So I thought that was interesting. I haven't made a final decision yet with regard to whether we're going to see a recession this year. I think we're still at about a 50-50 chance for the third and fourth quarter, but I'm still getting in more and more data. I'm like the Fed, I can't make up my mind. Okay, so anyway, we've got the biggest deal this week is the CPI tomorrow. Trueflation continues to sit under 1.5 at 1.36. Mortgage rates have popped up over 7% again. And according to the report I saw, today's 30-year mortgage, the most popular mortgage product, is at 7.37. That's up 0.11 percentage points from a week earlier, but it's up above. It had dropped actually below 7% at one point. So now I want to show you the details of the PPI. Of the CPI reporting. So we've got 1.37 as the average right now across all of the different items. But now let's go ahead and take a look at so first of all, let's look at this chart. You'll notice what the trend. This upward trend right here also had something to do with their changes in their methods of reporting. But you'll see right now we are way down here, and we've been this way ever since the first day of February. So it's easy to note that we're now at 12 days where we've had this trend line. Okay, let's go ahead and we'll look at the various different categories. Let's not start at the top. Oh, we did food and alcoholic beverages. You'll notice down. List. I always like to look here, though. You'll see what happened here to our chart. I'm so sorry. Food and non-alcoholic beverages. Here we go. Now let's look at the chart. And we've got 0.2% on food and non-alcoholic beverages. The total is 0.13%. Okay. You've got food away from home still up 1.45%. Now these are, 1.55. These are year over year. So you see the total here, year over year, is almost down to zero on food and non-alcoholic beverages. And you can see the trend line. The trend line is super down on that category. Okay, let's go on to the next category. You go to housing, which is the big one. And as I've mentioned before, what we have on housing, look here, what's happened to other lodging, down 2.58%. Then we want to look at rented dwellings, 1.62%. So under 2% on rented dwellings as of today. But we do have this category, 3.71% up. Now that is housing total, because why? Because owned dwellings are up 5.88%. Now, this is owned dwellings is not going to be affected by this effort by the Fed. In fact, it's counterproductive to own dwellings. If we keep the interest rates high, you have all the people with the golden handcuffs that are not going to move out, and that is what's keeping the price of the houses very, very high, because there's no inventory. So this is something which is not going to be affected by keeping these rates high. Okay, let's go on to the next one. We got transport. Transport, as you can see, all down, 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 down. A week ago, a little bit of a jump up, but once again, let's look at the details here. You've got transport total is now at 0.18%. Remember, that is a year-over-year number. Now, a bunch of that is because of oil, gasoline, other fuels being down 8.69, but you do have right here, hard to see it here. Here we go. Public transportation up a little, but cars, actually, here we go. Vehicle purchases down also now 5.19. That's because used car prices, well, new car prices down too, but also used car prices. So you can see most of this is below zero at this point also. And I don't know why anybody would think it's going to go up. That's one of the big questions. Why would these things start turning up again? I don't see any particular reason. Now we have utilities here. We've got overall electricity 0.81. We've got utilities total 0.42. And then down here, look here, natural gas. Of course, we've been talking about this, and we'll talk about it again in a minute, but natural gas super far down. Now, I could imagine natural gas bouncing at some point. So it could come back closer to zero, but there's no evidence right now. Right now, it just continues down day after day after day. Okay, the next category, we have health. Okay, now this one, health was impacted by a one-time change. So you notice health has come back up to 0.49. All right, so you see the trend line is up. This is not going to continue though, because this is a one-time change in the way the government analyzes or determines what the health costs are. So this is not, this is going to stay about where it is. I mean, again, it could go up or down for other reasons, but right now there's no reason to believe that this is going to be impactful on the overall picture of inflation. Household durables. So these are longer term purchases. Look at this chart. Look at the drop here. Holy mackerel. We are down now to 2.38%. So this was a category that was up in the 6s and 7s. It is now down to 2.38. Does that trend line look like it's planning to reverse? So anyway, let's go on to the next one. We have got alcohol and tobacco. This is one that's been stubbornly high, but now it is starting to also go down. So we've got alcohol products are down under 3%, way down from the 7-8% that it was earlier. And alcohol is actually down now to 1.1%. Again, reminding you, this is year over year numbers. All right. And now let's go to the next one, which is clothing and footwear. This one was also stubborn. You can see it really hung in there, and then it just fell right off a cliff to right now it is negative 3.66. Huge drop from where it was just a short time ago. And then you have communications. Whoops. Jumped over that one. Communications also down now. It had stayed fairly high. It was never that bad, but now it's down to a negative 2%. Then you have that education category. This is one that's staying a little bit more tough. Even now but the overall average just under 3%, where you have education, what they call education 1 is what's holding that up at 3.54. And then you have finally regional and culture, almost the last one. Regional culture dropped off a cliff. Not sure why this has happened. Maybe seasonal And I would think that some of these should be seasonally adjusted, but we also saw, so this would suggest that we're beginning to see a little bit of a drop off in all the pressure on hotel rooms. We saw that up above, and other kinds of recreation and culture events and things. Possibly the steam has gone out of that business. It was crazy there for a while. We had the Taylor Swift effect last year. You may remember that, where they were saying that she was basically responsible for keeping the economy going last year. So, and that may have been true for a while because people were traveling to her concerts and spending all that money. And finally, this last category, this is kind of like the personal items category. They call it other, but it's mostly personal items. This has also been stubbornly high up in the sixes, but you can see what's happened. It's dropped like crazy, currently at 4.1. So that's the only one that really is still up in the fours in terms of the total category. All right, I just wanted to show you all of that to give you the details of what we're seeing in this in the inflation picture, because it is a line by line, and I really think that investors should pay really close attention to this category right now, because while we are seeing an improvement it's less and less important. The bond prices and the inflation prices and all this are less and less important, but they are still the number one drivers of what's happening in the stock pricing, and in particular in the case of Tesla. So then where are markets now? Let's take a look at what's happening. We have got Tesla this morning sitting up 0.72 cents. Well, 72 cents, not 0.72 cents, actual 72 cents. Then we've got the Dow up 24, the NASDAQ up 14, and the S&P up $1.61. We have got the Magnificent Seven mixed, with Apple and Google down a tad, Microsoft down a little bit more, almost 1%, and then Meta up 1.5%, and NVIDIA up again, almost 1%. Let's look at the percentages on the Dow. We've got the Dow up 0.06%, NASDAQ 0.09% up, S&P up 0.03%. So generally things slightly up this morning, probably going to be a little tentative, all based on what's going to happen tomorrow on the CPI. But as you know, you never can tell with the markets. They can go crazy for reasons unknown. Now we got the Cathie Woods that are up strongly this morning, suggesting that the folks who invest in these kind of risky growth stocks are anticipating that the CPI print will be good tomorrow, and that the treasuries will start to come down. These ones are the ones that are the most affected by the treasuries, but overall these are up extremely strong this morning, and Tesla has from time to time tended to follow them. It is not following them this morning, up only 0.26%. All right, let's go ahead and take a look at the bonds and see what they're doing this morning in anticipation of tomorrow. And right now we're sitting at the 10-year only down 1 basis point. When we look at the rest, we have pretty much everything on the long terms are down about that 1 basis point, roughly, 1.5, 1.2, etc. Although the 2-year, well, even there. So, but the longer term ones are either unchanged or slightly up. So the inversion continues to be there and or getting stronger. But the 10-year is continuing lower and lower. It's now down, while we've been watching, it is now down 1.4%. 1.4 basis points. All right, let's go in and take a look at oil. Last time I checked, it was down this morning, kind of barely. It's down 8 cents at 76.76. So staying at the kind of the top of that range that has been recently. Brent is moving in about the same direction, maybe down just a little more. Natural gas, though, continuing down. Now, what's happening with natural gas? I've read a number of articles on it this morning, and it continues to be the same thing we've talked about. There is tons of inventory. U.S. makers are making tons and tons of natural gas, and guess what? We've had a mild winter. So, apparently the Red Sea thing is not really affecting this category or oil very much at this point. So the mild winter is the big deal, and natural gas is down to 1.841, way under the $2 that it has been recently. Then we've got the dollar sitting really flat this morning. You've got gold down a little bit, but still right in the range it's been, about $2,030. Copper up a tad this morning, almost 0.5% up this morning at 3.7. The Bitcoin is up 500, sitting at 48,712. So getting very close to going into that rarefied space above 50,000. And then there you are. We've gone the full circle. Let's go ahead and take one more look at Tesla, and sitting about, well, only up 13 cents now. And so as mentioned, right now, at least everything is kind of dancing around the zero, except for the Cathie Woods and NVIDIA, which are having a great morning. Okay, so please hit the like button, subscribe button, and the notify button. Later on today, we have got Brian White, of course, at the noon hour, which is his normal spot. And then we've got Larry Goldberg coming in tonight to help me talk about all the good news that happens the rest of the day. We'd love to have you buy some Cybertruck bottle openers, $25 for one, $45 for two. All the information is down below in the description. And then Patreon, again, love to have some folks continue to contribute to the Patreon, which helps to make this show possible. So that's all I've got for you, and it has been great talking to you.